Hello, ladies and gentlemen, and welcome to this Bright Blue speech with Bim Afolami MP. For those of you who don't know us, Bright Blue, we're an independent think tank for liberal conservatism. And one of our major research themes is around, or new research themes is around the economy and how we can recover from COVID. And Bim, who is MP for Hitchin and Harpenden since 2017 and chair of the APBG on credit unions, is going to deliver a speech entitled Beyond Thatcher, a New Conservative Economic Policy. And really the context for this is obviously COVID has turned the world upside down, including Tory economic thinking, because spending in terms of state spending is gigantic at the moment and questions a lot of Tory, long-held Tory principles around, for example, load spending and fiscal discipline. So Bim is going to share his thoughts on what next for Tory economic thinking to get us out of the economic mess that we face ourselves in. For those of you who are tweeting, please use the hashtag Beyond Thatcher. The other thing I should mention is that Bim is going to speak for about 20 to 30 minutes, and then we're going to open it up from questions. The questions you can ask through Slido, and the link to that you can see on the webpage. So if your question gets selected, I will read it out, say who you are and where you're from, and then Bim will answer it like that. So over to you, Bim.
Thank you, Ryan, and it's a pleasure to be here. Well, virtually here. I'm in Parliament in Westminster, but you can tell this isn't my wallpaper or my paneling. But it's a real pleasure to be here with Bright Blue, and you've done fantastic work. And thank you to all of you who are tuning in on YouTube. So I really appreciate it. So as Ryan said, COVID-19 has turned the world upside down. It gives us the chance to examine deeper questions about the nature and direction of economic policy, because COVID-19 is really the second seismic economic event in 12 years, the first being the financial crisis of 2008-9. In June, I published a report entitled Unlock Britain, which set out 10 practical ways in which we could help the economy recover. But these were very much practical policy considerations rather than being anchored in a broader philosophical framework. And it's that framework that I want to discuss today. I think we need to rethink our economic philosophy as a conservative party and rediscover some fundamental conservative values and principles which are, and always have been, broader than just market economics. I believe that we need to embrace an active, enterprising state, reformed and reforming, that can help drive an enterprise nation, this great country, an enterprise nation, forward. And this nation should be one with strong environmental credentials, which can deliver an everlasting environment. We are currently still in an economic era that began in the early 1980s, led by Reagan and Thatcher and copied through most of the West. And it progressed with a high degree of apparent success until the financial crisis of 2008-9. And since then, it's really been stumbling on, in my view. A few things have been nagging at me for a long time. If our current model works so well, then why have the growth rates in the West been significantly lower over the last 30 years than they were for the previous 30? Why is wealth inequality growing despite huge investment in education, social mobility programs over recent generations? COVID-19 is the second time in 12 years when the government has had to make significant interventions into the market economy in order to ameliorate the potential for and the consequences of widespread economic collapse. The government is currently, until October, paying the wages directly of millions of people. It has effectively nationalized the railways. It has delivered the deepest government intervention in the economy for generations. Now, I ask, how is this action sustainable with an economic philosophy where free markets are seen as a good in itself and state action is regarded as inherently unwelcome, and where a balanced budget is the goal for any Conservative chancellor? Now, much of current economic thinking in the Conservative Party was set in the Thatcherite revolution. succinctly described by Nigel Lawson in 1984 as, and I quote, increasing freedom for markets to work within a framework of firm monetary and fiscal discipline. Now, I believe in that, and that articulates, I think, a pretty simple truth at the heart of macroeconomics. However, in the Queen's Speech debate in 1979, after that famous election victory of Margaret Thatcher's, Margaret Thatcher declared that she had won a watershed election in which the public had voted for the individual and against government. I think that this country was very fortunate to have the Thatcher government in 1979, indeed throughout the 1980s, and it transformed the health of the British economy. Today, we need to be more ambitious for high growth, achieved by high innovation, than we've been for a long time. But the way that we do that is not necessarily, indeed, I'm arguing not to be against government. Indeed, as John Micklethwaite and Adrian Wooldridge explain in their timely new book entitled The Wake-Up Call, which came out, I think, about a week or two ago, Thatcher did more to change the debate about the state than she changed the state itself. It's my view that the greatness of Thatcher was not ideological. It was because she was radical in reaching solutions for the economic problems of her time. She didn't look at the Churchill, Eden, and Macmillan governments and regard any change from those governments' policies as unconservative. She looked at the situation anew and adapted conservative principles of freedom, opportunity, self-reliance, prosperity on the basis of hard work. She adapted those principles to the problems of her time. And I think we need to do the same thing today. We need an active, enterprising state to help power an enterprise nation. In recent years, I think conservative economic thinking has been quite muddled. We profess to believe in a balanced budget, but nobody seems to want to reduce government spending. We often talk about reducing bureaucracy and regulations, yet our tax code is longer than it's ever been, and the quangocracy goes from strength to strength. The call for government to get out the way is a common one on the Conservative benches in the House of Commons. But we call for government action to deal with any problem that arises anywhere in the country. We believe in devolution, yet the central government keeps its iron grip on infrastructure decisions. We need to be clear what and who we are for and show how timeless conservative principles also apply in our new age. The economy should benefit the person with ideas rather than inheritance, the most fundamental conservative message of equality of opportunity. It should support families and communities rather than allowing multinationals to rip them apart in the name of efficiency, the fundamental conservative belief in the importance of family and small communities as the bedrock of society. Our economy should help the British business grow and scale here at home and be better at supporting our national champions in different sectors. And finally, as climate change worsens, we should aim to make the UK the cleanest economy in the world, truly a conservative act, conserving our green and pleasant land for our descendants. So I believe there are 5 principal long-term economic problems in the UK, and conservative economic thinking needs to provide a sensible response to them. The first is investment and productivity. Over the past decade or so, interest rates have been cut to practically zero. Corporation tax has been cut to its lowest levels ever. Profits of companies are at record highs. And according to traditional liberal economic thinking, these are all the things we should do in order to significantly increase economic growth, create a flourishing economy, and enable animal spirits to take charge. So why is private investment and productivity growth so low? There's little doubt that we're in the 4th industrial revolution. The economic future of our country will, in large part, depend on how we harness our advantages and skills in this area. Andy Haldane, chief economist of the Bank of England, set out his thinking on this particular question in June 2018. His conclusion was basically that our productivity problem in this country was not that the UK lacked for innovative, high productivity companies, far from it, but it was that the productivity gap between the top performing companies and the bottom performing companies is materially larger in our country than it is in France, Germany, or the US, or many others. In the services sector, for example, the gap between the top and bottom performing 10% of companies, so the top 10%, the bottom 10%, is 80% larger in the UK than our international competitors. The UK's international productivity gap is, Andy Haldane believes, and this is backed up with a huge amount of research and evidence, that international productivity gap is to a large degree a long tail problem. The UK ranks 38th globally for knowledge diffusion throughout the economy, despite ranking consistently in the world's top 5 for innovation. Haldane's thesis is that one of the principal ways for the UK to finally conquer the productivity issue is to significantly improve the diffusion of technological knowledge and understanding within sectors and within regions of the UK to make sure that we reach the long tail of businesses which are technologically behind their peers in the rest of the UK and across the world. Leveling up, and it's not the first time I'll say that, leveling up needs to happen within the private sector as much as anything else, across all regions and sectors of the economy. Unless we do this, our economic performance will continue to lag our competitors. The second issue is too much debt and not enough equity. The government's response to the coronavirus crisis in economic terms was absolutely stellar, and it's one of the reasons why there's a huge amount of faith in the Chancellor, Rishi Sunak. As a constituency MP, I know the relief of literally hundreds of business owners in my constituency in Hitchin and Harpenden who still appreciate and tell me they appreciate the financial support and assistance made available to them. However, debt, however cheaply and effectively provided, has to be paid back at some point. Corporate debt was reasonably high even before the coronavirus crisis and has risen sharply as a result of the government's loan schemes. City UK and EY, working with others across the financial sector in what's known as the recapitalisation group, over several months have done a lot of work on this, and they estimate that about £70 billion could arise in unsustainable debt by March 2021. A third of that debt was incurred as a result of the government's COVID lending schemes, and SMEs incur roughly half of the total unsustainable debt. And when you look at regions outside London, 75% of unsustainable debt is held outside London. Now, why does this matter? It matters because unsustainable debt is a real threat to British jobs. It's estimated that about 2.3 million businesses who will have a CBILS or a bounce back loan by March, April 2021, next year, will struggle to repay their debt back. Even within the 2/3 of businesses that will be able to repay their debt in time, their growth, as we try and grow our way out of this pandemic and the damage done economically by this pandemic, those companies that even can pay it back, their growth over the long term will be significantly impaired by their need to pay back this debt. And consequently, the ability of the UK to recover quickly will be curtailed. It's important for you to know this is not just a COVID problem, it's a long-term problem. Excessive debt and not enough equity have long been problems for the SME sector in this country. The volume of equity given to SMEs has long been very low by European or international standard. It's about £10 billion per annum on average. And again, when we see the equity provided, the small amount that is provided, it's heavily skewed towards London. Now, this lack of equity investment across the UK stops British SMEs reaching their potential and often encourages them to sell their companies earlier than they might have done otherwise, which is a significant problem for our economy. Now, it's not just the small business sector. Large companies have their issues as well. Share buybacks have boomed in recent years. 28% of FTSE 100 companies distributed more in share buybacks and dividends than they made in net income in 2019. So just think about that. They distributed more in share buybacks and dividends than they made in net income, which reduces the capital available to weather financial shocks in future. Now, there's been a long-standing concern that share buybacks stifle wage growth, stifle investment, leading to increased inequality and slowdown in productivity and accumulation of capital. By share buybacks keeping share prices artificially high and also encouraging a slowdown in investment, this may lead, or at least is one of the main reasons for, a growing dislocation between share prices and the earnings created. And what that does in the market is that it ruins the sort of signaling of what a share price is meant to do. So this is not a good thing for our economy. The third issue is the fiscal challenge. Now, you will rarely hear a Conservative politician, myself included, arguing against high taxes. In fact, we argue for low taxes because we know that high taxes inhibit freedom, limit economic growth, And in a philosophical sense, or indeed even a moral sense, it takes more from an individual. It means that you take home less than what you earned through your hard work. But we also believe in sensible government finances. And we know that excessive borrowing is just deferred taxation for future generations. Coupled with these points, the long-term fiscal outlook for the UK is terrifying, like that for most developed countries. We have a rapidly aging population. By 2066, 26% of the population is projected to be age 65 and over, which I suppose would include me in 2066, compared to 18% in 2016. And in 1966, just for information, it was 12%. So we are a rapidly aging population. A recent IFS report stated that health and pension spending would increase as a share of non-debt interest spending from nearly a third now to over 45% by 2066. I make this point simply to show that the demands on the public purse are not going down, they're going up. And that even if you exclude the debt that was taken on to deal with COVID-19. We are going to need a significant increase in economic dynamism and economic growth. But in order to maintain international confidence, we will need to set out a credible medium-term fiscal strategy, which ensures that people know that the UK government still believes in fiscal discipline. This will mean that some taxes should be cut in order to stimulate growth and activity, and those tax cuts can generate extra revenue, as we know. But that's not an absolute rule. And some taxes are going to have to rise at some point. And that will have to be done in a way that does absolute minimal damage, if any at all, to entrepreneurship, innovation, or international investment into the country. The fourth is that we need more inclusive growth. In Peter Hennessy's recent book, Winds of Change, he publishes an extract from a cabinet paper written by Harold Macmillan to his cabinet in December 1962, entitled The Modernization of Britain. And Macmillan wrote that there were, and this is 1962, Macmillan wrote that there were two fundamental things that needed doing in this country. The first was that Britain needed to, and I quote, increase our productivity. And the second was that we needed to rectify the imbalance between North and South. Ladies and gentlemen, the problems of the British economy are not new. They are deep and structural. Despite the launch of at least 40 geographic policy initiatives over the last 5 decades, the UK remains one of the most regionally unbalanced developed economies. In a recent EY report, they state that between 1997 and 2019, the share of the UK economy accounted for by the 4 most southerly regions in the UK increased, not decreased, increased from 60% to 63% in that period. We need to ask ourselves, is the way out of our problems to continue with our highly centralized mode of decision-making, or is it to enable regions and cities to use more local levers to thrive? And the fifth big economic challenge, I think, is climate change. Now, regardless or not of whether you're interested in climate change, if you're on this planet, climate change is interested in you. The economic impact of achieving our net zero target by 2050 is huge. The Committee on Climate Change thinks the cost is about £50 billion a year. Bayes puts the cost at about £70 billion a year. It will require wholesale changes in industry, transport, farming, heating, building, and many other things. This is a colossal task. Now, climate change will merit a speech all by itself. And I can't go into all the areas, but I will say this. The only way that we have a chance of cutting carbon emissions sufficiently quickly without harming the fabric of our society and our way of life is to decarbonize extremely quickly. We need to electrify practically everything that can be electrified as soon as possible and invest in a colossal amount of renewable energy. Now, principally, the impact will be felt in industry, energy generation, and transport, but it'll affect every sector. To do this, we will not just need immense amount of private sector ingenuity, but the private sector will not be able to make that transition fast enough without a lot of assistance, both financial and legislative, from the government. So I've set out the problems. What should we do about it? To deal with the problems I've set out, we should continue to bear in mind Nigel Lawson's dictum of 1984, increasing freedom for markets to work within a framework of firm monetary and fiscal discipline, but we need to go further than that. We need to build on that and do so in a coherent way so that the country and the Conservative Party knows where we're going. So what does an enterprising state mean? Central government needs to be a macro enabler. It needs to use its clout and broad strategic oversight to enable the private sector and other devolved parts of the public sector to do transformative things. First of all, there's no future for the UK without greater and more effective investment in skills. There's been a huge amount of focus on this, and I won't repeat all the different things we need to do, but I do think we need to continue finding ways to continue improving our record in this respect, like the idea of lifelong loan accounts proposed by Bright Blue, this think tank. The government has set out its clear intention to build and deliver much more and much better infrastructure. And as somebody who's whined about this for years, I completely support that objective. But the way for us to achieve it cannot be for the Treasury to control every single infrastructure decision of any consequence because of their lock on public money. We need much more private investment of infrastructure. And there are many ways of how to do this. There are lots of ideas floating around. My colleague, Gareth Davies, the new MP for Grantham and Stantham, is one of many who's doing a lot of work in this area. We need to allow many more development corporations to be set up for the purposes of delivering infrastructure using innovative financing models that allow money to be raised locally. Now this, allowing money to be raised locally and for infrastructure to be done in a different way in different parts of the country, and I mean different parts within England as much as any of the devolved assemblies. This will allow experimentation that will benefit the country as a whole, as different areas will see different ways of doing things. And they'll do so whilst being responsible because they will have to have the power to raise revenue locally in order to do so. My brilliant colleague, John Penrose MP, has long been arguing for a UK sovereign wealth fund. I completely endorse the idea, and I think it could also deal with many of our problems. It would create a pot of savings that could pay for the long-term fiscal challenges of things like state pensions and benefits. It would create an anchor investor for British entrepreneurs and startups, making it easier for innovators to transform their ideas into strong businesses. And it would create a source of funding for long-term investment capital. New cutting-edge technologies could be funded so that they could easily scale up without moving abroad, keeping jobs and that wealth in the UK. It could also help provide equity to British SMEs that have too much debt in order to grow, helping to power forward our economy. An idea that I mentioned earlier, that the recapitalisation group from City UK and EY, and I put forward also in my Unlock Britain report. This equity could also help underpin the union because a UK sovereign wealth fund would be offering equity to businesses from all across Scotland, Northern Ireland, Wales, and all the different regions of England. Now, how would a UK sovereign wealth fund be seeded? There's several sort of investment acorns, if you like, that you could use. The first, the fund could be made the legal owner of existing and future state-owned commercial investment funds, like those in the British Business Bank, for example. The fund could also be made the legal owner of state-owned land and property, managing and investing the profits from leases on behalf of taxpayers. In addition, like with other countries that have sovereign wealth funds, the fund should have the rights to all future mining and extraction, whether it's gravel for building, lithium in Cornwall, or mineral deposits that haven't yet been discovered. The National Fund, which is currently worth about £500 million, should be used to start the fund, in addition to a one-off capital injection from the Treasury. And in case any of you were worried about the sticky fingers of politicians in the future might want to get their hands on this money, it should be set up with a heavyweight board of trustees, like the Bank of England, to maintain its independence from government to government. But underpinning all of this, an enterprising state does need to improve the quality of our civil servants and our MPs and our ministers. As John Micklethwaite and Adrian Wooldridge say in their book, The Wake-Up Call, serious debate about how to reform government in the West has ground to a halt of late. We need to change this. As Michael Gove put in his Ditchley lecture earlier on this summer, and I quote Michael, "There are a limited number, even in the senior civil service, who have qualifications or expertise in mathematical, statistical, and probability questions, which are essential to public policy decisions. This means we need to reform not just recruitment, but training." Now, I agree with Michael. I believe that the enterprising state needs to create a new National School of Administration, a bit similar to the French ENA. From its establishment, any entrant who wanted to enter the senior civil service would need to, first of all, pass through it, and they need to pass some sort of exam or undergo some sort of course. And secondly, they'd have to spend at least 2 years working in local government or a devolved assembly. And I think this would give our senior civil servants much better ability to deliver the sort of enterprising state that we'll need in order to flourish. And all politicians should have to undergo a course before taking on any new ministerial posts. I think that'd be a good idea as well. It's not just civil servants, ministers as well. But regardless of the ability of politicians and civil servants, the enterprising state cannot be governed by command and control from Whitehall. We need to give local areas and cities greater ability to experiment with different ways of doing things. A sort of better, in my view, a better and more responsible and more comprehensive devolution settlement throughout the whole United Kingdom would have 2 aspects, both of which I think will have significant economic impact and will help spread growth and opportunity to level up, if you will. The first is that all regions, not just metropolitan areas with mayors, all regions need to have a greater degree of fiscal autonomy. We should allow regions to raise local income taxes or sales taxes or tourism taxes up to a limit, up to a small limit. We should allow them to make more decisions on infrastructure autonomously, as I set out earlier, to allow them to give private companies the ability to build and operate high quality infrastructure quickly, to allow the private sector to come up with different ways of recouping the costs from that infrastructure directly. We should also allow these regions to give local public services much more freedom on procurement, to allow them to give local government contracts to more local businesses. The second aspect is that the enterprising state needs to remember that economic growth and success can often come from investment in non-economic things by local people themselves and local regions themselves. For example, investing in a village hall or local library may not have a sort of ostensible economic benefit, but improving the local environment of a small town can have incalculable, or indeed a small village, it can have huge, incalculable improvements to the lives of the people who live there. It'll help keep people living there and get sort of contributing to the area, and can attract new business and new investment. The enterprising state needs to give freedom to local regions to invest in their own areas, give them more freedom to do that, and their own communities. They are the best people to know what needs doing in their area. And my erudite and very thoughtful colleague, Danny Kruger, has done a huge amount of work in championing this agenda, and I join him in doing so. But this freedom can only come if they're given more revenue-raising powers. So that's the enterprising state and how I think it can be effective. And I'd like to finish by talking about how the enterprising state can help power an enterprise nation. Now, we conservatives know that prosperity does not fundamentally come from government. It comes from people willing to start and sustain a business. Too often, the government seems to take the small businessman or woman for granted, trying to find ways to increase taxes and load on regulations that make their lives difficult. We should make things easier. We should reduce national insurance for new hires, keep taxes for the self-employed low, or indeed lower than they are at the moment. We should also maintain the difference between capital taxes and income taxes. Capital taxes should be low because it reflects those who've taken risks, created opportunities and wealth, and they should be rewarded for that. Coupled with other measures to help our entrepreneurs, like expanding the venture capital trust, the VCT scheme after Brexit, to allow a broader range of businesses to access VCT funding than what we're allowed to do from within EU rules. The government needs to strengthen our offer to international investors as well, so that they can invest in Britain. For larger companies, we should think about reviewing the tax deductibility of debt interest payments, which encourages companies, as I was setting out earlier with share buybacks, which encourages companies to build not very sustainable, often, capital structures that put capital maintenance at risk and make them more vulnerable to financial shocks, and indeed makes the government more vulnerable because the government then ends up having to stump up. And we should look at ways to cut down on share buybacks. The government's new Office for Talent is a fantastic innovation which helps encourage more highly able and qualified people to move to the UK. And I would encourage the government to strengthen that offer further by trying to encourage successful business people from abroad to situate their business or even part of their business in the UK, even if they aren't moving to the UK themselves. The government should also work closely with the private sector to help the UK's technological landscape, to help that diffusion of technological knowledge that I was talking about earlier. Let me give you an example. In distributed ledger technology, known by many as blockchain, we are witnessing one of those potential explosions of creative potential that lead to exceptional levels of innovation. We should follow the recommendations of the then government chief scientific officer, Sir Mark Walport, in 2016, and establish a Centre for Distributed Systems here in the UK. The centre would be established and sponsored by government. It would cost about £10 million in total to establish, but closely supported and co-invested by industry and would allow a lot of collaboration. It would have two principal priorities: a utility trade platform and an SME data and finance hub. On trade, the platform would be an environment that anybody wishing to trade in or out of the UK could approach. An entity wanting to trade would no longer have to establish trust in their data, physical supply, contracts, financial probity, etc., through a series of separate bilateral relationships with a number of different bodies. Instead, all the data necessary would be generated at the point the relevant contact was established, and effectively that entity would be able to plug in to that system. This could be transformative in delivering more resilient, frictionless, and efficient UK supply chains, would cut down a huge amount of time and bureaucracy. And the UK tech sector is one of the best in the world, if not the best in the world, to help provide logistics, financial, and data technology services to the international market. And so that's the first. The second priority it would have would be for the National SME Data and Finance Hub. It could help in both the short-term recovery period from COVID and address the more systemic issues of access to debt and equity capital by bringing together our world-leading fintech sector, encouraging competition in financial services and building and enabling better use of financial data. This hub would enable automated access by lenders, equity providers, and SMEs themselves for all relevant data points. Easy access and much greater choice on funding options for SMEs would encourage competition, would drop the cost of finance, and as the hub would be so data-driven, there would be a facility for the behavioral profile of all participants to build up over time so that trust and creditworthiness could accumulate, leading to better and faster decisions by finance provider and SME alike. And on the environment, which very much fits within an enterprise nation, because the environment I think we should see just as much as an economic challenge as anything else. The state needs to do more, but I think the state's role should be focused on two aspects to support the innovation in the private sector. First, the government needs to continue to issue binding targets for decarbonisation in key areas like electric vehicles and give more targets across different areas of the economy. The second aspect is for the public sector to provide and help bring in the private sector finance required for every aspect of decarbonisation. So that's the public sector bringing in its own finance and getting more private sector finance to sort out the decarbonisation difficulty, because without extremely high amounts of finance, and money is currently reasonably cheap, without that, it's very, very hard to see how we decarbonise faster. The whole point of that finance is to ensure that there are very few barriers for individuals, communities, and businesses which prevent them from transitioning into a low carbon future. There would have to probably be some tax rises in certain areas to help both raise revenue and to change behaviours, but hopefully these would be short-lived as the transition took place. lubricated by this finance, which the City of London, the best financial services industry in the world, it would enable inventors and innovators to take advantage of the UK's position to turbocharge our approach to net zero and export their technologies to the world. This could be transformative for our economy, transformative for our environment, and transformative for jobs, levelling up to save the planet, and Britain can lead the way. So that's it. There's a lot here. Thank you so much for staying with me this far, and there are lots of other things I could have talked about. What I've tried to do is to sketch out a new economic vision for conservative thinking, to build on the achievements of the last 30, 40 years by addressing our modern weaknesses that are mostly shared by our international competitors. We have every chance in leading the world in a new type of conservative economics, as we did in the 1980s and 1990s, all to ensure a prosperous future for Britain, an enterprising state, an enterprise nation, an everlasting environment. Thank you.
Great, thank you, Bim. I thought that was a really thoughtful, weighty, comprehensive speech with lots of new ideas for the government to consider. For those of you who are watching, I know there was a slight technical problem at the beginning, so some of you probably watched from the start a little bit later and are catching up, but some people also watch from the start, so we'll take questions from them, and then no doubt there'll be some further questions as well. I'm going to start, Bim, with a question just around fiscal discipline, because that really was the kind of overarching policy approach of the Conservative-led government in the early part of last decade. You know, there are moral and economic reasons for balancing the books. Obviously, you know, with COVID, there's been the necessary spending, but that is ballooning the deficit. Now, a lot of people say, you know, we need to go for growth. Growth's going to allow us in the long term to repair the public finances. But looking at our growth rates, you know, particularly what's been projected, but also in recent decades, the type of growth that you're going to get is not going to pay for that deficit. I mean, it's a huge deficit. So you're going to have to get into the territory of tax rises and spending cuts. You've hinted at some of that, but I mean, what's your sort of overall view of, you know, between tax rises and spending cuts? Is it going to be like 2010 where it's disproportionate on spending cuts, or is there going to be a bigger role for tax rises? And is there anything more specific that you can give where you feel actually this is where taxes could rise, this is where spending could be cut?
Good question. I personally don't think, I think there is always room for spending cuts. There's always room to be more effective and more efficient with spending. And of course, some spending is wasted, and we should look for those. But I'm not convinced that there is nearly the sort of fat that we saw in 2010 on spending. I also think that the nature of the public services and how people want their public services to run also means that there isn't that much room on that score. So therefore, we're going to have to raise more revenue. As I said, there are ways in which in areas you can cut taxes to raise revenue. I think stamp duty, for example, the cut the Chancellor announced, I think will probably end up raising revenue. But they're also, you can't get away from it. And look, I'd love to say we shouldn't raise taxes. I'd really love to say that, but that just isn't the real world. And I think we are going to have to raise some taxes. Where would I do that? The principle should be do it in a way that damages innovation, entrepreneurship, and growth as little as possible. I think we should also try and do it in a way that helps, or rather stops bad behaviors and leads to better ones. I would look at the environment. Environmental measures are ones that I would actually go quite big on if we're trying to raise revenue, because I think that's an area where it will get people to change behavior, and we ultimately, you know, can raise a lot of money on areas like transport, for example. So that's where I would look on the environmental issues. That's where I'd look to be raising taxes in any sort of significant way.
Great. And then I suppose my second question is around the comments and vision you had around the environment. And you talked a lot about private investment as well as government investment to achieve that net zero challenge. But I suppose it's not just about financing and subsidies, it's also about a change in behaviour, which of course those incentives might support. But do you think there's also a role for a government which is you know, into sort of much more regulation, which is actually, you know, in terms of how you heat your homes, we're going to say, actually, new homes shouldn't be on the gas grid, but for existing homes, perhaps we need to be stronger and say you need to upgrade your home if you want to sell it on. And equally, in the transport space, petrol and diesel cars, there's probably a strong chance that the government may phase that out, ICE vehicles, a lot earlier than originally planned. So is there a role not only for government in spending and providing subsidies, but regulating and going further in some areas than what they've done already?
Yeah, you're right in principle, I think. But again, they work together, right? So for example, let's take diesel and petrol cars, really good example. Now, if the government at a later point, I don't think they're quite at this point yet, but at a later point were to say, we need to speed this up, you can set a target of next year if you wanted to, but people don't have the money and the electric cars aren't available for them to buy them. It's pointless setting a target that you can't achieve. So what you've got to do is set an ambitious target, but just with enough lead time. And that's where the private investment will come in. Let's take, you mentioned boilers. Again, the government could just turn around and say, right, by X date, you're not allowed to have A, B, or C type boiler, full stop. That will mean that the private sector, the big signal gone to the private sector, then makes it a lot cheaper. There's a lot of innovation, a lot of effort goes into providing the however hundreds of thousands of boilers you need every year, whatever it is, for doing that. So actually it's both. So it's both happening at the same time. My point is that you can't do one without the other. There's no point us setting really hard targets and not allowing the finance. And there's no point us giving all the finance, but yet not really forcing the issue by putting targets. So really both of them. And that's, by the way, why the central government is the right place to do those things, rather than local government when it comes to the environment. But in other areas, local government is where we should be focusing.
Great. Okay, I'm going to open it up to questions from the audience. So I'm going to start with probably quite topical and maybe quite a sensitive one, which is from Alex Jacobs, who asks, isn't it fundamental to demonstrate our iron commitment to international law in order to create the attractive international enterprising state you outline?
Internal market bill, there we are. Is it fundamental? Yes, because ultimately we've always had the reputation of being, a bit dry, but very loyally, and we stick to our commitments. And that's been our reputation. I'd go more broadly and say that having high quality institutions is also a big part of our economic success. And I didn't mention that, but I do think that's worth saying. So in terms of the internal market bill, I think the big problem with the way this is rolled out has been that we didn't communicate early enough in this process, and I hope we will do so this week, that this was very much part, this is within the wider context of a negotiation with the European Union on getting a deal. It's very much an insurance policy and a fallback option. And of course, the UK is going to be in a tough space if we're breaking international law. And I don't think anybody wants to do that. And I don't think anybody thinks that that's where we'll end up. However, the way in which this has been communicated so far has been, less than optimal. And I hope that we really sort that out over the coming days, because whether I think something's true or you think something's true doesn't really matter. It's about the impression we give across the world. And I think whether we think of COP26 or whether we think of international investment, maintaining our reputation as a place where you can respect the rule of law is absolutely key. And I think that's what we need to make sure our reputation continues.
Great. And just a reminder to everybody watching, obviously, if you want to ask questions, you can do that through Slido. And we're also tweeting on hashtag Beyond Thatcher. So a question now, Bim, from Ashley Goodall, who says productivity often equals more technology and fewer jobs, which poses an issue for jobs. So how do we expand productivity while expanding tech jobs faster?
Really, really good question. And Ashley is correct that if you maintain a factory, for example, making the same thing, and it currently has 50 people, and they invest in a bunch of capital machinery, they're going to end up with fewer than 50 people, and some of those people have lost their jobs. there are two things you need to do. The first is make sure that you are creating enough new jobs that have long-term jobs with them, not things that are in short-term or in dying industries. So you need to make sure that you're creating more jobs. But the second thing you also need to do is you also need to make sure that the jobs that you're creating are, or rather the people working in the jobs that you're creating, have enough of the technologically minded skill set, so that the first intention when a company wants to increase productivity is not to get rid of people. They think, how can I use this person with technology to improve the quality of what I do? Whereas too often what we see in certain aspects is, I've invested in new technology, therefore I get rid of people. I'll give you an example of this. I used to work in banking, and I remember somebody at HSBC explained to me that at first, when they got rid of a lot of the cashiers, behind the screens when you go into a bank, people thought that it would lead to just fewer people working in retail branches. In fact, they're just as many, if not more, because they're all doing slightly different things. They're working with the technology and now doing other things and trying to sell you mortgages or pension products or whatever. So actually, it's not an either or.
Great. Okay, so a question now from Joseph Silk, who says, do you think changing work patterns as a result of COVID will cause a significant transformation in the structure of our economy away from the metropoles, from London?
On some level, I think it will, but maybe not quite as much as people think. I think that there are a lot of people who, particularly young people, and I think back, look, I say young people as if I'm really old. I'm 34, young people. People really value going to the office, actually. If I was still in the city, I would want to be going to the office. So I don't think that people just won't go, though I know a lot of people that were doing 5 days a week that will now do 3 or 4 days a week, or people who are doing 4 days a week who now do 2 days a week, or whatever. What I actually think is you end up with a displacement of spending. So there's the dry cleaners in the City of London, that is going to find it harder because they're going to have fewer people, but that person is still going to get their shirts dry cleaned, and they're probably going to get them dry cleaned in Harpenden or Hitchin because they're spending more time in where they're from. I pick just 2 commuter towns at random. So it's not that people will spend less money, they're going to spend it in different places. I think that could lead to a real renaissance in many of our towns and villages, small towns and villages. I've noticed it in my own constituency. Initially, I was very worried about the health of the high street town centre, and I've really seen them flourish. I've seen new businesses open up. And I think that actually that could really benefit a lot of the country. And again, talking about levelling up agenda, almost by accident, this could be one of the most significant economic things to happen to small towns and villages, because people are spending more time in them and not taking them into London, Manchester or Birmingham. What happens in those cities, however, is that I think they are going to have to repurpose a lot of their commercial or retail space. And that is going to have to, I think, probably go to housing. We know we've got a housing problem. And I think that's a good thing. It will mean that there's more footfall in the city centres. It will mean that the restaurants and the shops and the bars that still stay there will be busier because they will have more people who are actually living there as well. And it provides home for people. So I think actually it could all work out, well, as long as those local areas have the flexibility to do the right things for what's right for their area.
As a follow-up to that, though, Bim, if people are home working more or not coming into the centre of a city as much, will people instinctively want to live not in the city? So all this kind of conversion from retail and commercial space to residential, you're saying, in the city, will there be as much demand for that? Won't people actually want to live in less expensive areas, in rural areas? Isn't there going to be a huge demand and increase in housing in areas which aren't used to that level of demand? And there's obviously, with the government's planning reforms, there's some concerns that the algorithm is going to lead to higher levels of housing in particular areas. do you think actually we might see more pressure in greener villages, and actually the government's plans around planning might be quite tricky there?
You might be right. It's difficult to know. I'm not personally convinced that the city is dead. I think that there are a lot of people I know who've been bored stiff in lockdown and this COVID thing, and they just can't wait to be getting out and seeing friends and doing things in cities. So I think it's a myth that nobody wants to be in cities anymore just because they're not working 12 hours a day or whatever. So I think that is slightly overstated. However, your broader point about the attractiveness of living in more rural areas, I think goes two ways. Yes, and I pick, say somewhere like Hitchin or Harpenden, or somewhere like, parts of Surrey or Berkshire, which are commuter places. They have grown because of the need of people to get into London quickly on the train. But if you don't feel so much of a need to do that every day, then you might move to Lincolnshire. You might move to Cheshire. Even if you work in London, you might move to, further away. So weirdly, I think you will get more demand, but I actually think it will be more dissipated across the whole country because you won't need to be in the commuter area nearly as much. So I think it sort of goes both ways.
Again, COVID helping the levelling up agenda somewhat.
Exactly. It was all a cunning plan. That's a
coming plan. Cunning plan.
I think we should stop there, right?
Right. Okay. Well, I will take the final round of questions. So there's two questions. Firstly, from Patrick Lowe, this vision sounds like a welcome move to fiscal decentralization. Could you clarify whether this includes the creation of a community municipal bond market? First question. And the second question is from Andrew Lemming, who says, how do we strike the right balance between decentralized and centralized approaches financing the transition towards decarbonization?
On municipal bonds, I've often thought that we should have more of them. The Treasury, I suspect, is nervous because ultimately, if you are giving a local area ability to raise debt, that local area says it's going to pay back, but then by the time it needs to be paid back, it's a whole new bunch of people in control, and they say, well, we can't pay it. And then the Treasury's left picking up the tab. So I think that we can have municipal bonds, but we need to do it in a way that is tied to revenue raising happening locally as well, which gives much more confidence that that money can end up being paid back by that local area rather than them falling back on the Treasury. And in relation to Andrew's point around the right balance between, central government and more local government on decarbonisation, I think the right balance is the central government passes the law and helps to make it as cheap as possible for people and communities and businesses to decarbonise. And the local areas, and whether it be towns or villages or regions, they then use those tools. I think it's one of the areas where you need a very central approach, very centralised approach on the law and on finance, because local areas will not be able to do that as much. But of course, when you see a local area that does something brilliantly, that should be copied by other people. And I see some of that happening already, and I think we should do more of it.
Okay, and then the sort of final question, because we've got 2 minutes left, from an anonymous person, so it could be the chief whip, could be the chief whip, could not be. Says, is there a way to raise serious revenue without hitting work incentives through higher income tax or national insurance?
Interesting. So thank you, Chief Whip, for that. There is. I think that when you make manifesto commitments, they're very important, and that's a political rather than economic judgment. And political trust is very important. Manifestos, as the Lib Dems will tell you, do matter. However, this is not a problem that needs to be fixed in the next year. That's why I said in my speech, a medium term. We are going to have to think about this over a longer term period. And so when you're looking at the next 5 to 10 years, there's a reasonable judgment that you do certain things, if not necessarily on income tax or NI, there are various pension tax reliefs, there are various other things that can be looked at that are related to those things. In addition, when I was talking about local devolution, fiscal devolution, things like council tax, which is raised locally, there are other things that are very big revenue raisers, and let alone things like fuel duty and various other things on the environmental side. There are many things that are big revenue raisers that are not income tax or national insurance. And I think that when you've made manifesto commitments, they really matter. But over the long term, you've obviously got to see your overarching sort of spending commitments and make those judgments accordingly.
Great, thank you very much, Bim. Very, very wide-ranging and thoughtful speech. Again, apologies to the audience for some of the technical problems we faced in the beginning. Hopefully you've now all caught up in terms of the speech, but we will make the video of the speech available online, as well as a written copy online as well for you to read. Just to say, the next Bright Blue event is on Wednesday. We've got a big conference looking at the role of social housing and a kind of centre-right vision for it. We have the Minister for Housing and Planning, Christopher Pincher, doing a keynote speech, and then a couple of sessions, one looking at how you finance social housing going forward, and the second, how you improve the quality around it. So please do join us on Wednesday for that, on Wednesday morning. But a kind of virtual round of applause for Bim, and thank you very much for your time and thoughts today.
Thank you, Ryan. Thank you.